Hello traders, the title of the video is a chart analysis from different angles. Alright, let's get started. The financial instrument that we are looking at is bio-marine pharmaceutical belonging to the healthcare sector, the biotechnology. And we want to talk about a chart analysis from different angles. All right, you want to become a better stock trader, currency trader, a better chartist. All right, we recommend to traders to watch the full length of this tutorial so they may learn more tips and tricks that can help their chart analysis. Chart analysis from different angles consists of analyzing the chart from different viewpoints. All right, very often when traders are analyzing the chart, all right, so for instance you look at this chart, what do you see? All right, what do you see? A trader may turn around and say that, Joe, there is a triangle here and there is a high chance that we may see a continuation to the downside. So that's one viewpoint. All right, so that is a one chart analysis from one angle, all right, from one viewpoint alone. In order to become a more efficient technical trader, one must analyze the chart from different angles. So one angle is that there is a triangle here, the price went down, and there was this consolidation in a triangle. There's a high chance that we may see a triangle. Another trader may say, all right, a triangle means that anything is possible, that there is a possibility that it may go down or go up, that one should not assume anything. That's correct. That's correct. A triangle means that anything is possible. All right? All right. Another trader may look at this and say, George, we have an inverted top here. So this is a round top, an inverted round top. The price went up, price pulled back to the cycle point here. He or she that will say that we have an inverted round top, all right? And he or she will measure the depth of this round top and say that, George, are you blind or what? There's a high chance that the stock will go up to this level here at $171 a zone. That's another viewpoint, all right? So which one should you take, all right? To avoid technical analysis trading mistake or to avoid chart analysis mistakes, one should look at the chart from different angles, and most importantly, is to be ready to buy and to be ready to sell. All right. So, for instance, if you are looking at this chart and you adopted the first viewpoint, which means the price went down, and then we have a consolidation in a triangle, high chance that there is a continuation, you will be prepared only to sell. In that case, you do not want to buy, you only want to sell. Therefore, if you are an aggressive technical trader, you may just sell. And then, the price may go up and then you lose, and you don't want to do that. On the other hand, the person who is adopting the second viewpoint, all right, meaning that I'm talking about, in fact, the third viewpoint, which means one is looking at a round top and expecting that there will be a breakout here. If that person is only expecting a bullish breakout, he or she will only be prepared to buy, and if he or she buys here, and the price goes down instead, he or she will lose. All right. The best approach is to have a look at it from different viewpoints, but again, after you have analyzed the chart, you have performed your chart analysis from different viewpoints, you do not want to assume anything. You are ready to buy and you are ready to sell. You are bearish trader and you are bullish trader at the same time. All right? You may decide not to buy, that's okay. You may decide not to sell, that's okay, all right? But you just need to wait until there is a clear-cut signal. So after we have analyzed the chart from different angles, we are now waiting for a clear signal, right? So we see it, if you see it like this, that the price went down and there's a triangle, for you, this is a bearish watch list, bearish trading setup. Then you will put this stock on your bearish watch list. You will only sell if there is a signal to sell, yes or no? But you will not just sell because you have a bearish trading setup. On the other hand, if you see it as a bullish trading setup, put it on your bullish watch list. Do not buy straight away. Wait until there is a clear-cut buy signal using a different time frame trading method. All right. Another viewpoint. So we see different viewpoints so far. There's another viewpoint. Another trader may say, George, this is the head and shoulder chart pattern here. This is the head, and this is the left-hand side shoulder, which is a kind of a triangle here, an expanding triangle, and the right-hand side shoulder is another triangle. Personally, looking at this chart, that's the way I see it now. But though I'm looking at it like this as a head and shoulder chart pattern, that is a bit complex for other traders to see. The head, the left-hand side shoulder, and the right-hand side shoulder. My expectation that the price will go down. All right, but I will not just buy or sell. I will not just sell it straight away. I will now use a different time frame trading method to trade it. Especially if it's a triangle, you just wait for it to pop out first. So you may say, George, on the monthly chart, if you pop up the monthly chart before that monthly chart is closed, it's too late. In that case, you may drop to the weekly chart or daily chart as it's popping up or popping down. And then you will implement, okay, the first candlestick, at least one candlestick you see here, it pop up here. Then you implement a top-down trading method to buy it. But there was no signal to buy after this pop-up here. It went back inside. So we are now waiting for another pop-up. So if it pop down, all right, if you do not want to wait for the monthly candlestick bar to close as it was here, you may switch to the daily chart or weekly chart, at least weekly chart. Weekly chart will make more sense. Daily chart is quite distorted very often. Daily chart, one day, weekly, you go to the weekly chart, weekly candlestick bar is closed above or below, and then you start implementing a different time frame trading methods. All right. So whenever you are analyzing the charts, okay, as a stock trader, currency trader, commodity trader, don't adopt, okay, one viewpoint alone. Don't analyze the chart from one angle alone. See it from different angle. In all cases, just be calm, and we use, okay, a different time frame trading method. Looking at my viewpoint at this point in time, without ignoring other viewpoints, as I already mentioned it, I'll see it as a head and shoulder chart pattern, with the left-hand side shoulder being a triangle and the right-hand side shoulder, okay, being another a triangle. All right, but again, all right, once we see that this, because it's a triangle that is forming, okay, the right-hand side shoulder, anything is possible. I will expect it either to go up or down. But because the price has failed to form a new higher high after this one here, my expectation is that it will go down more, but I will only sell if there is a signal to sell. If there is instead a signal to buy above the triangle, or the price form a higher low above this triangle, I will buy. This is what we are talking about. Be ready to buy and be ready to sell. One thing that I said to traders before, is that anytime you see a triangle like this, draw the median line of that triangle. So this level of $88.39, that's the median line of that triangle here. Bullish, prior to bullish signal above the $88.39, and prior to bearish signal below it, because it's a very important, okay, a key level. The price was oscillating around that level of $88.39. There is another key level here. You see this triangle, which is forming the left-hand side shoulder. All right. We have again a median line, which I draw roughly here. It's not easy to draw this one here. It's at $67.45. Again, if it starts going down, all right, it reaches this level. Be aware that that level of $67.45 is another critical key level. The price may find support there. All right. So you want to buy below. You want to sell below. In both cases, be bullish and be bearish. And if there is a signal to buy, then you buy. If there's no signal to buy, and instead there is a signal to sell, you will sell. This is about chart analysis from different angles. So after you have watched this video, try to play around. So probably you are looking at different chart or different time frame. You look at it, you say, all right, this is this is that. All right. Now turn it upside down turn it to the left, turn it to the right, look at it upside down, look at it from different angles, and see what other traders are looking at. But always do not assume anything. Acknowledge what you have seen, the different viewpoint, and just wait until the price starts showing you the direction going up or going down. All right. So because we are on a monthly chart, all right, I'm going to remove some of my line to wrap it up very fast. So now that I'm talking about a head and shoulder chart pattern, you have here the RSI period 14 that is dipping below the level of 50, because we use the RSI to pinpoint bullish and bearish financial instrument. The RSI is indicating to me that the momentum is becoming bearish. This is another authentication that probably, not guaranteed, probably we have more chance that it will go down than it will go up. We will see. Looking at the stochastic is not also helping the bullish trader as such, but with the triangle, anything is possible. Now, the next step, to trade it like a pro, we say, all right, it's okay, it's all right, it's all right. We go to the daily chart, all right, this is the daily chart now. That triangle is still in place. Traders are buying near the low of that turquoise triangle. We are now on the lower part of the triangle. As I said to you, prior to bullish signal above $88.39 and prior to bearish signal below it. Is there a signal yet? No, there is no signal yet. If you are buying here, now we are at the low. If you want to buy here, you see now it's retesting the low on the daily chart. You will use this point as another training setup. All right, so you now say daily chart, hourly time frame, 10-minute time frame. Now from this point, let's go to what we are here. We go to the hourly time frame. In that case, you are using the daily chart as your training setup instead of the monthly chart. All right. So now we are on a hourly time frame. Here we are. There is a kind of double bottom chart pattern. Be careful, my friend. Be careful. A double bottom chart pattern below a bearish trend line. A lot of traders do that all the time. Usually you'll see that. But the knot of that double bottom is right here. So if one is buying, be aware of the knot here and know that the price can still come down or find a resistance on the edge of that bearish trend line on the hourly time frame. This will conclude this discussion today about the chart analysis from different angles. All right. If you have any question or suggestion, put in the comment section, and in due course I will be recording another video to answer your specific question. If you find this video useful, let us know by giving us the thumbs up. If you think that is another useless recording, let us know by giving us the thumbs down. If you think that this is an essential tutorial that other traders may learn from, feel free to share with your friends on Google+, on Twitter, and also on Facebook. Until the next time, enjoy yourself and be very happy. We are the SGW24 traders talking about chart analysis from different angles. Happy trading to you all and speak to you soon.